Fed Day, we're getting excited, Mark. What are you going to be watching in particular? Because everyone's expecting a cut, and there's a lot of focus on the guidance, of course, what that kind of guidance will look like. Will it reinforce market pricing or push back against it?
So I think there's two big things to watch for. It's the dot plot. Is obviously the big one. How many kind of cuts are priced in, not just for the rest of this year, but into next year? There's an awful lot priced into the curve. So it's going to be pretty hard for the dot plot to match those expectations. Our colleague Ven Ram has done an excellent macro view at making that point and saying that short-term yields have upside because of that. But on the flip side, the kind of counter argument is, do people really care about the dot plot? Because it's by a bunch of Fed officials, some who might be pushed out by this administration over the coming year, and there's a new influence kind of coming in. So that's one kind of short-term dynamic, but I don't think people will run away with the readings in that because the guidance will be partially dismissed on that change of Fed governors over the coming year. I think that's probably the really big issue. It's the questions that'll be really interesting. The press conference that'll be more interesting than the forecasts. So I think how Powell handles those questions is where we'll get a lot of volatility. Given the amount of uncertainty on exactly what setup we get, not the actual rate decision, I know there's a slight risk of 50 basis points, but pretty unlikely. The uncertainty about what Powell will say, what we get in the dot plots, there'll be a lot of short-term volatility. But I'm not sure that it's going to be the big macro driver, given that we are getting Miran going to come in, going to have more influence. We're potentially, at some point in the future, going to lose Cook and get a replacement there. It's going to increasingly become Trump's Fed. The macro story is very clear, though. This is another kind of emphasis that the dollar downtrend is there for the coming years, and it has another 10-20% to fall over the coming years. And I think another big corollary of that's been really popular at the moment and is a valid one is, as part of this end of US exceptionalism, which has been a big theme this year, the dollar downtrend is part of that. It is going to be good for emerging markets, and emerging markets are going to be some of the big winners over the coming years. We might see a real new EM cycle.
Mark, if you could pose a question to Jerome Powell today, what would you ask him?
Oh, that's a hard one, Valerie. I would say, if you could give us an honest view on his own personal view, not fall back to the committee, but his own personal view. I would like to put the onus on him and the accountability on him on where he thinks inflation will be at the end of next year and the end of the year after. I think one problem with the committee, and it's generally a positive, is that people can hide behind the committee for these forecasts. But sometimes you want to put some personal accountability. And as the Fed chair, as the person who most governs this, I would love to know exactly what his dot plot projection is each time, where he stands on that kind of stuff. So I think if I could ask him one thing, and I know he'd actually answer it, I would pin him down in that. But of course, he's very skilled at fobbing off these questions, so he'll probably ignore me.